Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see that yesterday, despite that market has shown more or less solid bounce up from the confluence of the 1840 area that we have specified, still later it has moved a bit lower. So it means that currently we're just watching for, and no patterns actually have been formed around it. So market just tested the level, shows the bounce up, and then keep going lower. So yesterday, although it was not a lot of statistics data have been released, it seems that, at least by indirect signs, we make suggestion that Fed starting the quantitative tightening program. Just because it is a bit curious collapse on Bitcoin. So you could see that overall technical performance and what we said about Bitcoin on Monday morning, it does not suggest a possible collapse. So in general, overall here's way how market performs recently suggests that should be not significant retracement. If you remember, we talked about this 30 even area, maybe this confidence support was rounded, and then theoretically market should re-establish upward direction. But as you can see, it has happened very fast. Just within 1 hour, market has completed, in 2 hours, market has completed to 4 or 5%. And actually all support levels that we initially predefined for a possible entry, it just has been erased. So market hasn't formed any bullish stop. This is some breaking of the normal bullish performance, and that might happen only by some external factor. This is first thing that we see on other markets. Second moment, if you take a look at the 10-year yield, here's market is making some attempt to fail the hand and shoulders pattern. As you can see, market shows two extended right arm with the moving above the 3%. And although you could see here some pause, market might retracement, but we have yesterday the tail close, and market stands above the right arm, which seems too extended for a bearish pattern, especially when you have the slope of the neckline. And it means that there is really chances are growing that market will take out of this top, and actually we will get the failure of the hand shoulders. It means that currently we should keep going with the really gently with any bullish stop, bullish patterns that we have on the gold market, and trying to not take the position blindly, trying to anticipate the reversal, but we should make the relation and rely only on more or less significant bullish context and trying to minimize the risk, searching areas to take position where we could place relatively tight stop. So that's the primary task on the gold market. Another indirect sign of the rising concern on the current situation and triangle liquidity is another reasons, an indirect sign in interest rates. So if you'll take a look at the auctions results of the 3-month treasury bills, 6 months treasury bills, you could see that recent auctions have been set for significantly higher interest rates. So for example, 6-month auction has set yield around 1.75, while initially it was suggested it will be 1.58. For a 6-month period, is really big change in interest rates. So it means that investors, market is a bit oversupplied. Nobody would like to buy bonds currently at these levels that have been set, and demand higher interest rates. And with the really anemic market for new issuance of the bonds, as we discussed in the weekly report in the fundamental part, it just has no way than make the interest rate yields creeping higher. That correspondingly also could make impact on gold, is because investors who are holding the gold also might need some liquidity, and when the liquidity is drying up, it makes pressure on all markets, maybe at some different degree. So bad markets such as let's call it Bitcoin is becoming the first victim where investors trying to extract the liquidity. Stocks market is coming next, but safe haven assets maybe will take the last place, but still they are also hurt by the liquidity demand. This makes us to be careful with any bullish setups, as I said. So on the daily chart on the gold, here's market take some pause, but for position taking, it would be really nice if we would get, for example, the bullish grabber here. For instance, this market keep going lower slightly, forming the bullish grabber, and that led us to get at least some pattern on the daily chart for a possible upward action. On the 4-hour time frame chart, trend here stands bullish, overall context still, at least theoretical, stands bullish. On the 4-hour time frame chart, take a look what has happened. That was our previous support. Market has shown minor bounce, collapsed to the next one. Now market stands at another major confluence support area, 1832, 1840, showing minor bounce. The question is it really possible, for instance, taking the position right here just because market stands at this area? The answer is yes. So theoretically, you could take the position because this level lets you to place really tight stop. You could place it just below the confluence. But at the same time, you have to accept the risk that you're taking position without any real price confirmation on the lower time frame. So market doesn't show any reversal action. So the shape of the price here on the lower time frames cares and shows no reversal action. So currently it seems like just the technical reaction on the confluence support without any preparation for further upward action. That is the environment that you're trying to anticipate. Maybe later something will be formed. And in this case, you will get great entry if you really will be on spot for a possible reversal. But that's the risk that you have to deal with. If it is suitable to you, yes, of course, you could try to take the position here, placing stop right there, and just watching what will happen. So the same story we could say about on the hourly chart. So that was our previous OP confluence support. Was it possible to take position here? Of course, was possible. But take a look what has happened later. Yes, market has shown bounce up from the strong support confluence OP, but later when the technical response was over, without any patterns, no bullish patterns have been formed here. Market just collapsed to the next one. The same thing could happen here. Market hits the XOP, it also stands in the strong support, and by itself this is great level to consider. But at the same time, the level is just the level. You need to see the performance of the market here. That definitely will show you a reversal type of action. So it might be some reversal patterns. But currently, guys, actually I do not see it yet. So we have some just kind of ABCD, which is triple to sell pattern, but nothing else. So it might be just ABCD minor pullback from the XOP, and later market could proceed lower to the 1812 on the 20 area, because overall background, as I have shown you, suggests that probably only by an indirect sense it seems that quantitative tightening program has been started. So Fed has made some first steps on the markets. That potentially bearish factor for the gold, and that's the reason why I suggest that let's keep watching for this level for today, tomorrow, and see what the performance market will show around it. If we get clear bullish reversal pattern, we will try to take the long position.